So from Europe to, we're going to go around the globe to Latin America. Our next speaker is a venture capitalist in this region. She's from Seedstars Capital. She's going to tell us about the Latam startup ecosystem. Please help me welcome Gabriela Ruggeri.
Thank you. Hello, everyone. Good afternoon. For us, it's about 11 in the morning, so before lunch. Anyway, I wanted to speak to you about the Latin American startup ecosystem. How many of you have been in Latin America ever in their lives? Oh, quite a few. Okay, I'm good. So I can be challenged on what I'm going to say here today. Okay, venture capital in Latin America is still an emerging ecosystem, a lot more than Europe, actually. So we have about, in 2012, we had about 50 firms responsible for 130 investments in Series A investments in Brazil that generated $260 million in assets under management. Let's give you an example of the largest country in the region, how much activity happened in a single year. How is this group of investment firms composed? It's some global firms, a small but growing number of venture funds, local venture funds, and some super angels. And then this is surrounded by a big network of accelerators that have emerged in the last few years, which give a really, really upstick growth into what's the angel investing. So early stage investing has become a lot more significant. Also, we have the convergence of consumption and technology into the market. This generated a very big potential market to be claimed. And finally, we'll see that Latin America is not just about clones and e-commerce. There's more interesting things going on. Relative size of Latin America, what's going on? So when we look at the region, we see this is a region of just over 500 million people. Interestingly enough, about 50% of those people are in one single country, Brazil. The rest are distributed, followed by Mexico, Colombia, Argentina, Chile, Peru, Uruguay, and so on and so forth. Some other aspects that makes this market interesting and how startup and entrepreneurship or that culture is generated, and what are those factors that generate a good culture for entrepreneurship. The region has had a low rate of unemployment, contrary to what people think. This generated scarcity of labor in certain markets, fostering innovation, but also make it challenging. The median age, so we have a quite young population. The median age actually goes from 26 to 33 years old. Then the ease of doing business. Clearly, as you can see, is not easy doing business in Latin America. But that makes it all more challenging and interesting. And the VC and private equity attractiveness, we're a little bit far up there. And we go anywhere from position number 29 to position number 65 down there. This is of a total of 200 countries that were ranked in this survey. What are the critical issues? What concerns investors in general and the different players in the market? Exit opportunities. Are there enough exit opportunities? Is the standard VC model, Silicon Valley structure applicable to other regions? I don't think it is, but we'll see more of that. Local frictions. Local frictions Do they pose a threat undermining the ecosystem, or are they advantages for the smart ones? What's the future outlook? We had a bit of a hype a couple of years ago, and you heard Brazil, 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 and everybody thought that was infectious to the rest of Latin America. Did Brazil crash, or are we going into crash? Is it taking off in a more mature way? We'll see what the conclusions are on that. Getting into the business environment in Latin America, how attractive is this? When looking at this, we're evaluating economic activity, entrepreneurial culture, and deal opportunities, human social environment, investor protection, and corporate governance, taxation, and depth of capital markets. Latin America doesn't have active capital markets as in most of Europe. When you look at this graph, we're overlapping a few different things. The black line actually shows you the US, which actually, of course, scores 100 in most of those things. The blue line is China, and the dotted yellow line is the overall Latin American market. The green line shows you Brazil, which is the star of the region. If you see what makes this region attractive is the level of economic activity, and the rest of the factors are somewhat quite complicated. But economic activity ultimately drives investment. That's the basic underlying thing in most markets. Investors will work, and we as players in the industry have to work to make the rest of those other factors applicable to economic development, and therefore the startup ecosystem. What are things we can do to improve those aspects and make the region more attractive? And these are lessons that we've learned from several other markets and can be transferable to a lot of new markets applying these things. So into domestic businesses, we need to make sure that we allow for companies to fail. If we want an entrepreneurial ecosystem, that means people are going to try, and they will fail. And most people going into this will actually have to deal with that. So having companies fail in a structured way or legal way is very important. So we have to decriminalize, actually, the bankruptcy of companies. Also, and actually taking the myth out of that aspect of failing. People need to make sure that they've tried and they can try again. And that's very important. And that's very simple in developed markets. International funding. We need to make the markets more transparent, give fair rules to everybody, make international investors be fully protected in their investments into the region, and therefore attract more capital. Labor. We need to take rigidity out of the labor market, transferring the restrictions on the labor market from making difficult to fire people to actually protecting unemployment. So we can make sure that rotation and the talent is able to circulate in a better way. Intellectual property. In industries like technology, it's very important to have copyright and patent right protection. Those are things that traditionally emerging markets are relatively weak. So we need to improve those. Ecosystem country comparison. So here we're seeing a bit of what's going on. We're looking at the startup output, so how many startups are generated in a scale of 1 to 100, in a percentage scale. How much talent do we have in each market? How much funding is available? The ease of doing business, the market size, and the support structure. And here are where Latin American countries start coming apart. And we're not the same region. Every country has unique, distinctive factors. For example, Brazil is very attractive in terms of market size, as well as Mexico. But when it comes to talent, that's not really the case. It has low unemployment. Brazil had over 200,000 positions covered last year by foreign professionals because of lack of specialized technical knowledge. Chile, for example, has a great support structure. The infrastructure is very, very positive towards entrepreneurship. You can build a company in a day. It takes 2 months in Brazil to build a company. And now we're happy because it takes only 2 months. When I started a company in 1997, it took 9 months to register a company. Countries like Argentina, although a basket case in probably everything else, and everybody knows we've been responsible for trashing all the markets only a couple of weeks ago, we're quite good in talent. Why? Because we've had so many crises that we're very adaptable people, and we've become more creative. So that's an interesting point, too. General investment thesis. One thing I wanted to cover today was the view from the investor. So most people here, most people that participated of the competitions are entrepreneurs. So what are investors looking for, and what's their investment thesis in general when listening to an entrepreneur? And use that when you're pitching to us, essentially. So the general investment thesis in Latin America, it's surrounding 4 main points. One is the growing middle class. In the largest market, which is Brazil, you had over 20% of the population was elevated out of the poverty line. Today, 50% of the Brazilian population is considered middle class. And actually, in the region overall, 50 million people have been elevated in the last 10 years to be part of middle class. That's a lot of purchasing power. So a growing middle class is one of those points. A second point is the internet, broadband, and mobile user penetration. As you can see, those are very interesting trends, and even more so, the mobile users. We have over about 1.65 mobiles per person in Latin America. Does that mean that everybody has a cell phone? No, that means actually a lot of people have 2 or 3 cell phones. But still, it's very interesting. And it reaches a lot easier, and it penetrates a lot easier the broadband internet, which we thought it was the only way to get into a lot of people's homes. Another thing that is very important is, or a third factor, is the level of engagement and social activity. Latin America has the second highest number of users globally in Facebook and Twitter in a single country. Who guesses what country is that? No guesses? Brazil, of course. But actually, we have also the 5th and the 6th, so it's not just Brazil. And also is the second largest country in number of hours spent in social media networks in general. That's very impressive. So we have very engaged people that have more purchasing power, that are using technology more and more, and that actually are revamping consumption. So that rounds up a very interesting picture for Latin America overall. There we go. So what are the opportunities? What are the sectors that we believe are the most attractive ones? Current investment focus is actually into the consumer sector. VC is also evaluating other sectors, which are B2B and enterprise companies. But the most attractive sectors moving forward will be on e-commerce, marketplaces, education, and healthcare, which will be the top priorities of the spending power of all these families that actually got into the middle class, financial payments, and B2B2C markets. So we need to provide technology to all these companies providing services to consumers. Stages. Growth stages is crowded. Why? Because the private equity firms are quite solid in there. But there's a lot of opportunity on the stages of Series A's and Series B's. We're following some sectors which are traditional to other markets, but there's a lot of local and regional market initiatives. For example, Brazil, of course, has a market which is big enough to have local initiatives, but the regional market is also attractive for the rest of Latin America. Business model focus. We have 4 stages, which is the fast follow, which is primarily the copycat without much adaptation. The localized business model arbitrage, which is applying the local intelligence and specifics of the market to proven business models elsewhere. And we're mainly today on that stage of investment. Moving quickly into the unique local models, which are market-driven models based on the needs of the base of the pyramid of that population that has elevated. That's why basic services such as education, healthcare, basic financial services, property, and others are very interesting. And finally, exit opportunities. There's a limited track record on this, and we believe that the next generation of exits will come from strategic M&A and trade sales. And that has been where Latin America has acted most of its trajectory. We do not have developed capital markets, so companies need to be attractive, need to make sure that they're providing profits, and they're a sound business model which does not live out of multiples of future funding. That doesn't work in Latin America. So there's a tendency for some founders to sell earlier than in more mature markets if they are not able to reach sustainable business models. So that's what we look for. The exit timeline in general is 5 to 7 years, and we believe it's going to continue to be so, and even longer in some cases. So this is more or less the picture of Latin America, and I thank you very much for listening.
Thank you, Gabi. Thank you very much. I was thinking, you say like people have 1.65 mobile phone. Like, what is 0.65 of a mobile phone? Is it like a Nokia phone? Or? Okay, that was mean. Quick question. Can you tell us one success story from Brazil? Like, what is the Facebook of Brazil? The company that we maybe haven't heard of, but that everybody's talking about in Latin America.
Well, actually, the most successful companies, although they became successful in Brazil, they're not Brazilian. The most famous ones were, or famous that IPO'd in the States was Mercado Libre. And we have two up and coming. One is Despegar or Decolar in Portuguese.
So what are these companies doing?
Mercado Libre is like the eBay for Latin America. Actually, it got invested by eBay. And after different times, they decided to go public. And they're very, very successful today, a $5 billion market cap valuation for Mercado Libre.
Okay. Thank you very much. That was Gabriela Ruggeri. Thank you, Gabriela.